So now I'm going to invite our moderator panelists to come up and take their seats. And I mentioned it earlier, Ann and Lee were the ones who put this together with Diane. And I'm going to introduce Diane, but they really should be the ones up here doing it. And if you guys, Dawn, and you guys can sit in those chairs. So our moderator is going to be Diane Durance. And if you're involved in the startup ecosystem, you probably have run into her over the years. She's been president of Michigan Capital Network. Now she's doing, I think it's like 3 or 4 different jobs all put together with DFD Consulting, Foundation, Stillwater Business Intelligence, and then in your spare time you help the I-Corp people too. So absolutely wonderful. I'm going to hand it over to her for the next 45 minutes. Here's the microphone for you, and you 3 can share the.
Okay, well, thank you for that introduction. Just to frame this conversation a little bit, I wanted to start with a few statistics so that you know what we're working with when we talk about the angel community, especially in Michigan. So from the latest information that's available, there was a Michigan Angel report that was pulled together by Ann Arbor Spark and the Michigan Angel Fund. And the last publication was in 2022. So this information is a little more than a year old, but the best we can come up with right now. So in 2022 in Michigan, we had 933 angel investors. They invested on average $50,000 a piece over the course of the year, which resulted in $46 million being invested by angel investors in companies in Michigan in 78 deals. That works out to about $600,000 per deal. So when you think about that, 933 angel investors across our state, when there are several 100,000 people could be considering angel investing, where they are accredited investors and they get involved. So when you think about it, it's a very small percentage of possible angel investors that are actually angel investors. And then in addition to that, comparing Michigan to the United States, in Michigan, the average annual investment per deal ranges between, for the individual investor, between $10,000 and $40,000 typically. Now we see with the average overall, it's 50,000, but more typically, a specific angel investor will be investing somewhere between $10,000 and $40,000 in a deal, with their total annual investment being the 50,000. And the number of deals per year that an individual angel investor on average invests in Michigan is between 2 and 5 deals. So for those of you that are entrepreneurs and you're trying to get in front of angel investors, these are the numbers that we're seeing. So across the country in the United States, the average annual investment per deal ranges from 25,000 to 100,000. And across the country, number of deals average that angel investors invest are up to 10. So we have a little bit less investment per deal in Michigan, and also our angel investors invest in fewer deals. So that gives you a sense of what our landscape looks like in Michigan. And now I'd like to have our panelists introduce themselves. All 3 of them are active angel investors. And so we'll just go from to right here, and Michael, the start.
Sure thing. Appreciate the data, and always good to have that keep you grounded. My name is Michael Cozier. I'm currently the chair of Michigan Capital Network's 8 investment review committee. So that group does is MCN has a venture group and it has an angel organization. So the angel organization looks at the earlier stage deals that would be too early for the venture fund and considers which ones to bring forward to the angel members for the purposes of investment.
Hello, my name is Dawn Knights. I'm based here in Ann Arbor, managing a manufacturing company. My background in investing started a number of years ago when I became interested in impact investing and started investing in West Africa, raising money for that. I'm also working with an alumni social impact club and still involved in West Africa. Now, since 2.5, 3 years ago, I've also started to do some angel investing here in the US in the Midwest.
Yeah, thank you very much. Don Effort, and I retired from automotive and was really interested in what I could do to help businesses here in the US and, you know, more specifically here in Michigan. And got interested in angel investing as had a friend that was involved out in Denver. He said, hey, Don, it's really cool if you got a stomach for it. And so then I started looking around for a group to involve with, and Woodward Angels stood up in 2019, and I involved Woodward Angels every way to the learning process, to be around with other people that are involved with it, and three, you know, hopefully there's some success stories and you know, share some enthusiasm about helping people as they're starting up their business and achieve their dream.
Great. So, Dawn, going a little deeper to your impact investing, how has that colored your view of angel investing in general? I know you're also a member of Ritsu Midcast. Are you only investing in impact ventures, or did your interest expand down there?
I'm not in the US, I'm not focused on impact investing, more separate. I am though looking at what the big companies solving. I'm not necessarily looking at companies that are investing solely because of the impact they're having. The companies that we're looking at with the group are very focused on an exit and raise, and if they weren't, they wouldn't be getting money from angel investors. So, but it does, I guess it colors my background because, you know, as an angel investor, we all get excited, really excited about some deals. And if there's a deal that I feel can have a really strong impact on solving one of the world's big problems or could be applied to developing countries, that's when I get really excited about the deal.
Great, great. Michael, how about you telling us a little bit more about MCN? You described that there's the venture fund and then there's the angel group. I know from my experience there that a lot of the members are focused on what I think of as following the fund. So the fund managers and analysts pick up opportunity. A lot of the members follow that. How do you get members involved with some of the early stage companies?
Yep, that's a great question, Diane. So MCN, it consists of 4 different groups across the state. And while they do this venture investing that Diane alluded to, that tends to be later stage than at any of the companies that we saw here today. And so a lot of times for the earlier stage companies, what it takes is bringing in something that piques an investor's interest, which can be hard given the diversity of experiences that any single group of investors has. So ultimately, it's about bringing a strong presentation of a company that has a clear value proposition and a defendable moat to the angel investors and really putting it in front of them, but then also starting to build momentum around that deal. How one does that? Maybe we'll talk about later. I think someone nervous or deal sponsor or a deal lead really gets momentum going around one of those early stage deals, and one of the details that we'll talk about a little bit later.
Right. And Don, you are exactly the angel investor that we're hoping to cultivate. We look at our population in Michigan and we see people coming out of manufacturing, automotive, biotech, and they're retiring or they're in for career. How can we find more people like to get them involved in angel investing? How did you stumble in?
Oh my goodness. Yeah, you know, I think number one, I'm going to say, according to the statistics, I'm an average Michigan angel investor. But I also invest some, Michael put out in the venture funds, MCM venture fund. On the seed side, it's interesting, my perspective is, it takes somebody who isn't loyal to a lot of corporate America. Corporate America sets things out pretty well developed, you got a nice process, great PowerPoint, whatever, back, that's gonna flow through. When you get into the angel world, it's a little rough tumble out there. You got great ideas. And I think the very first one I ever saw, the young one comes and pitch it, and like my heart is bleeding. I'm like, how much money can I give her? Just yell it out. Well, the good news is my wife with me said, I love the idea also. Hold up, what's the market for it? It's like, oh, okay, let me step back. Let me step back. Now, I didn't know, but it takes a little bit of adventure, and willingness to risk stuff. And I'll say, I did mention I had farm out code for 4 decades. So the irrigation recommendations, I'm all there, plenty of talking about, and so anyway, on the farm, it's a risk every year. You're throwing the dice on the table, you're hoping something doesn't work you out. I think I got to use risk and saying, okay, what are the people like? And so I'm trying to plan some other people. And I've been successful with some, and others have come in and have said, Don, you're nuts. This ain't gonna work. I'm happy with my 5% return that I'm getting out here. And the aspect of helping people, I know they need help, but I'm happy over here doing my hobby and stuff like that. So you need somebody that's enthusiastic, motivated, has a little bit of money that they can lose. Because I'll tell you, I may be the only one in here who's lost money so far, but I've lost money in angel investing. And I'm not sad about it. I believed in the people. I believed in what they wanted to do. It was super exciting. I think it's a great idea, but its time hasn't come, or there's other factors that need to be worked on. And not everybody's, willing to take that kind of risk or live in that kind of uncertainty. So as I go out and look for more people to get involved, I look, for a little bit of, hey, are you willing to, take a bit of risk and not worry and don't get upset, don't yell. You have a nice attitude about it, I guess, is also what I'll say.
Great, thank you. And let's go deeper into your personal investment strategies. Many entrepreneurs sort of picture that when angel members attend an angel group meeting, they're sitting there with their checkbook burning a hole in their pocket and they're ready to write a check at any moment. And they come away disappointed to find out that they did a great presentation. They even got kudos from the members, but then people don't invest. And I think that a lot of times it's because angel investors aren't sitting there with an open checkbook. They have some kind of strategy in mind for their investment for the year. And they may be thinking that they may have set a budget of $25,000 or $50,000 for the year. And they, are picking and choosing. And as someone said earlier, Dave or someone said that they are looking at dozens, if not 100 deals during the course of the year, and they're going to pitch events and so forth. So let's start, Michael, with you. How do you plan for your angel investing? Are you one of those guys with just an open checkbook and every time you show up at a pitch night, you're ready to invest?
I wish I had an open checkbook. It depends. The answer to a lot of these questions, like when we come here looking for answers, we want an answer, but a lot of times it depends. And for me, one of the challenges is not about check size, it's about the bandwidth that I have from a time perspective. It's right now, for example, I'm helping a company raise a round, hopefully, if it gets approval. And so right now, if I go to a pitch event, my checkbook's just closed because I don't have a chance to look at that company. Otherwise, I think the benchmarks that you provided are pretty representative of what you would normally expect. A couple deals per year at about the check sizes that you're talking, unless, there's a company that I'm super passionate about, as there has been in the past, and I end up pooling other investors and other investor dollars and helping them raise more money because you're so passionate about the company. So I think for me, I'm pretty average in terms of average deal size, but it's more so a function of right now, am I looking for a new deal?
For myself, I think I do put a lot of emphasis and weight on the entrepreneurs themselves and advisors. I'm looking at the team, and I'm looking very carefully at what do you think chance is, say, because I'm the first to go right and you think chances that the company actually is going to get towards it is the person sitting in front of you, they know the companies that require them in the industry can do concepts in that sector, and they call them up and talk to them. Are they having an ongoing discussion with the people who are, what are the chances of this person going to get exit? Because I think company is one thing, and I'm all for company, but as an investor, I'm looking at limited time and that I'm interested in seeing. I know the time frame stretch, but I'm looking very carefully to do I believe in this person? Do I really like this person? Do I respect this person? Do I believe that they will not try their research? And what I think this person has the work, the knowledge and experience to take this company to the finish line in the next 5 years.
Yeah, thank you. I think, yeah, I agree, trying to understand the entrepreneur and the entrepreneur's motivations and their capability. And their capability to understand when things are getting bad and or when they don't know enough. Because, for a lot of these products, you see that total addressable market. Oh man, that's gorgeous. Of course, everybody can make money with that kind of market. But have they adequately assessed what that market really is and what they can bring to the table? And have they been realistic about their, we mentioned patents and their defensible moat. Do they really have something that's defensible? Or if they prove that out a little bit and a big company hears about that, does a big company just need to turn 50 engineers onto it for 6 months and they get it and scoot around the patents and you've lost all your money? Is the entrepreneur recognizing that kind of risk, telling you about it? And do they have, a rational exit plan, or are they going to try and camp forever? I got to admit, I got a safe note out there that I'm afraid they're camping on me forever. I may never get my money out, I have no leverage to get my money back out of them in the safe note. So I'm like, okay, I wonder, what did I really do there? Now they're still viable, they're still going. So yeah, what is the motivation, integrity of that individual and their capability? And I'll say being part of an angel group helps me bounce then those thoughts off of somebody else who's going to put some skin in the game and say, hey, what do you think? Did you hear? No, hold on, I heard that, but really think about it this way. Okay, now I feel better. Oh boy, I really don't feel good about that now. So, I think that really helps when you're trying to assess then that business pitch that you're seeing come before you, because I'm the average person. I don't have an unlimited pocket. And by the way, some of those entrepreneurs are come back around and they want more money. And they're like, hey, Don, we did okay here on the seed round. Now we need a bridge. We're going for Series A, and it's like, okay, I gotta save some money to put more in. So there's new deals, there's a fund, there's put more in. All of a sudden, you've got a little bit of change going out there.
Exactly. Well, a couple of years ago at the Michigan Angel Summit, we have Scott Shane do a keynote presentation. And Scott Shane is an author and expert on angel investing, and he's very data driven. He's a academic. And he said that you need to have 30 or more angel investments to be diversified enough to have reasonable expectation of achieving high return on your investments. Do you think Scott is right? And how does that factor into your thinking in terms of angel investing that you've done so far and what your plan is going forward for, say, the next 10 years of angel investing?
Well, first I would like to say, hope springs eternal.
Yeah.
So, I would say it depends. I'm sure his data shows that he's right. Of course, we all have our little secret success formula where we think, okay, I'm going to do better than that. You know, I'm relying a lot on the group's due diligence, so I'm trusting, also talking to my co-investors and learning as much from them as I can. And I think a lot of it depends on really how early you're going, because it's all angel investing, but you know, some angel investor, some angel presenters, the entrepreneurs presenting are really early stage, they're pre-revenue. Some of them are, okay, they may be pre-revenue, but they may have spent, you know, 10 years getting the technology ready to go in a university setting. So it really depends on not necessarily how old the company is, but how close are they to an exit? Are they focused on, do they know what their exit is? Have they got, you know, have they protected themselves along the way? And so I think if you find a later stage deal that's still in the angel, still going to angel investors, you can reduce that risk. I certainly hope it doesn't take 30 to get one winner, but you know, I've only been in this for 3 years, so maybe I'll come back in a few years later. Yeah.
You know, anecdotally, maybe there are 3 of us up here and we might all think we're above average investors.
Well, all right, that's why we were chosen for the.
Well, I haven't had any losses yet, but I don't have any evidence yet. Would think about return as an angel investor is always tricky, because the rise is so proud and defined, the variability is so wide. I'm bringing one of the myths, right, which that angel investors are doing this for money. There may be this culture around it that people hoping to get away that brings people into it, but in my experience, those people don't tend to stick around very long, because they're not willing to put in the work, put in the coaching that you need to do as an angel investor, of an entrepreneur, and really help grow these companies as you're growing the local business ecosystem. So the takeaway from that is angel investors, yes, they're hoping to make a significant return on their investment, but they're also doing this because they believe in the entrepreneur, or they believe in the unmet need that this company is solving, or that they believe that this is going to make a real difference in the community and society. So keeping that in the back of your mind as you're pitching as an entrepreneur and selecting an angel investor partner, I think will show that the angel investor is a little more sophisticated than just someone looking for that return.
Did you want to add any thoughts there, Don, before I launch the next question? Okay. So are there still terms, absolute default terms, when you look at a term sheet, or when you look at a type of company, whether it's something like, oh, drug discovery is taking, you know, it's high risk, and even if it does well, it would be 12, 14 years from now. What will I think just like it's like what you know is
There are certain industries I'm not good at personally as an investor. These are very profitable investments in pharmaceuticals. One I struggle with is food, specifically consumer food products. So I will typically maybe stay away from those industries. From a deal terms perspective, the devil's in the details, right? Like I've seen debt instruments that actually look and function more like equity rounds because of the rights or terms that they have. And I've seen equity rounds that more similarly, in effect, to the cap table resemble debt rounds. So I try not to be too hard and fast from a terms perspective, but I know in Michigan, maybe some other investors, after sitting on a safe for far too many years, have different opinions on it. So I'll pass the mic.
So I don't have any specific terms that would make me say no, but I also, I count on my fellow investors to look at the deal terms with me, and we usually as a group, our group does negotiate terms for the group. So I count on them to negotiate the terms. I usually look at, I make sure that there's a cap on, if it's a safe, if there's a cap and there's a discount. But that, I would say that's not a deciding factor for me. The deciding factor for me, unless I feel that the deal is just overvalued, the deciding factor for me really is, do I believe in the entrepreneur? Do I believe in this idea? Am I excited about what this company could do? And as I said before, are they going to be successful in bringing it to market and getting an exit?
Thank you. Yeah, I would say it's interesting seeing, I mentioned the safe, but yet we had a presentation here a couple months ago and discussion about usage of safe notes in Michigan is becoming more prevalent. Okay, that's fine. So now I think, as I would think about my next one, I would think about is there a way that I can, structure and discussion around, so reasonable period, and set maybe some better expectation. But I usually, after we find one of the great things about being involved in the Michigan Capital Network, we also hear each turn have a discussion about trends and how things are going with what the carry is or what different terms are. It's helpful to hear how those trends are may be changing. And I think it goes into the calculus, and, as we said, with other investors to have a discussion, are they reasonable terms? I don't think I would say anything is a deal breaker.
Okay, now I want to get to the key part of my questions here. And that is asking each of you, what strategies would you recommend entrepreneurs try to increase their opportunities with you and other investors? Are there things the entrepreneur, beyond, of course, having NEF coaching, everybody should have that. But other than that, what would be a good strategy to take?
Yeah, I guess I'll start off, and certainly the NEF coaching is great. And how do you make a pitch that's going to be effective and going to get to the point? I think also as you go through and the presentation about what that need to be addressed, why are you in a position to be able to do that? How are you protected doing that? And what does the future look like with that market in holistic terms? Then also, separate outside the conversation or the prime pitch, be ready to talk about, so here's some of those risks that I've thought about, and here's how we plan to mitigate, to show that you've thought through that, you've recognized it, it wasn't important enough in your mind to put up in the main presentation. You don't need to scare everybody off immediately, but make sure you're realistic about it. And also make sure you're listening to what the group is interested in. Are they interested in, is it a group that wants an exit soon? Is it a group that wants to ride through this a bit more? Try and get a feel for what their reaction is and, what that group's, I think, character is. Because you might be able to say, I haven't studied this, so the deaf person, you probably know, there's probably different groups in the state that have different characteristics or different tolerances in different segments. So figure out where your technology segment aligns with groups and their characteristics and what they want to invest in. If they have a strong science group, don't work. My friend out in Denver, great life science, great sustainable energy group, they have some experts in their group. They are they're solid in those areas and, they'll put through the record and the due diligence, but when invest, usually we're pretty good.
So. Our biggest investors taking a lot of risk. All like see that when most go over to step up on the table. So, my included because I was like, who's going? So I think to look at who else has seen the entrepreneur for me. I look at, have they raised grant funding? Is there some group that knows more details about this industry or this technology or this potential than I do? Have they been given grant money? I look at that. I also look at who their investors are. If they're investors who are industry leading, who believe in this company and are agreeing to sit on their board, or who have a network and contacts that I know are going to help these people get to an exit, that's huge for me. And I really look for that. If there's a company that doesn't have industry leaders sitting on their board and doesn't have those contacts and not industries are eligible for grant money, but one that would be in the tech area or mobility and technology, really look for that grant money because logically it makes me maybe reduce the risk a little bit because they put in some grant money that you might.
So, Don mentioned traction, in particular from funders and grant organization, government. The other where I look for traction is some other investors, right? So seeing that, maybe Red Theater, seeing NAF, or seeing some other lead stage incubators. Troy in the back is working with a life sciences incubator based here in the Midwest. So seeing that they, with their expertise and experience, have agreed that this company is solving a real problem. They've done diligence, on $100,000 investment, right? Makes me more comfortable reviewing their diligence without having to go through all of the steps I would independently on my own, and makes it easier for me to maybe write a check in a company I see a strong value proposition for, but don't have the bandwidth to necessarily do every last detail of diligence on myself.
Okay, I want to leave time for audience questions. I'm sure there's going to be some here. And before I do, I'd like to invite Troy to come up. Troy Zappo is the director of Woodward Angels, and he has a new gig that he is embarking on this week. And so if you could tell us a little bit about that, and then I'll give you my seat, and that way with audience questions, we can include you.
Okay. Yeah, thanks a lot, Diane. Actually, I know Diane quite well, and Michael and Don as well. So I've been angel investing through Woodward Angels for a number of years now. Became the director about 2 years ago, and so that's how I've got to know these folks up here on the panel really well. And as of recently, and I've worked with NAF as well. I've been a coach, so it's a great experience. NAF does a really good job of helping these companies. There's a lot of founders that have really good ideas, but they kind of need that additional help, right? Kind of fill out the other parts of their strategy here is obviously to raise capital. So it's a great job they do as well. So it's good to be a part of them. And so what Diane was alluding to is that, and I appreciate you letting me come up here and talk a little bit. And we'll kind of look into this a little bit, but so a company called Project Tech, Cleveland. What they do is they have a consulting business that helps early stage medical device, not just medical device, software medical device, diagnostics, wearables, all in the med tech space. Help those state companies out there, kind of build their teams, right? They'll have CFO service, commercialization strategy, market strategy, as well as like FDA pathway, regulatory, and reimbursement strategy. And so we're going to be kicking off a venture here relatively soon. In the next few months, we're going to stuff like that. So for a number of years, I did, entire, actually did a financial service for the company. Just made this switch. So a lot of it came from having, like, you know, being part of this community, like great opportunities there are in the Midwest and beyond. And investing through Woodward Angels for them, you know, get a chance to kind of do what I'm passionate about, or a bunch of folks that are really deep into the expertise. So
Great. Well, thank you. And, join our panel here. We'll take some audience, questions. Anybody have a question they'd like to ask the panel?
We'll do Mike and Diane, feel free to sit down. You don't have to stand. There's an extra chair.
Oh, okay.
Hello, so I understand that when we go to a pitch night, not everybody's there with the bleeding checkbook, right? You know, God, for any funny that way. But my question then is, so you were saying how sometimes you just don't have the bandwidth or the resources to be able, why would you go to a pitch night if you're not looking to invest?
A lot of it goes back to the curiosity and the passion. Recognizing that, you know, some angels are retired, others of us have full-time careers, and angel investing is a hobby and something that we will, you know, roll up our sleeves and get involved in, but it's not necessarily our full-time commitment. So it is something, and it comes back to, we're doing it for the enjoyment of it in addition to the financial.
I would agree with him, and I would say that, I think it's important to understand that the investors are there also because they want to be part of their community. That's one of the things that really attracted me. I found this community that was intellectually stimulating and exciting. Smart people with great ideas and investors who many of themselves had been entrepreneurs. It got me out of my day-to-day world. And it's exciting. So part of the reason they're going there is to be with their community. And even if they're not going to invest in the entrepreneurs' companies, they're learning, and learning is exciting. And that's what everyone, I think every angel investor, that's what it's exciting. So it's a community, learning, excitement, and probably learning. Every time I see a presentation, I learn something either about an industry sector or what's important in how the entrepreneur is presenting, and maybe they had a new idea of how they're going to exit. We're constantly learning. It's really fun.
maybe to add to that a little bit too, I think, you know, as an investor, it's really important to kind of be out there and understand what's going on in the market and like what new technology are coming out. So even if you're not ready to kind of cut a check, so whether it's you're an angel investor and you just don't have the bandwidth to do due diligence, or, you know, you're a fund and you're just not really deploying checks at that moment. I mean, you do need to understand kind of what's current in the market and like what competition looks like, and networking too. I mean, everyone just kind of in this space does want to get out there and network.
Hi, my name is Michael Gannon. I'm a question based around my company, it's educational company for several years. I'm at the point of launching in the United States, United Kingdom, and Canada. My product is finished. I'm going to help advertising dollars push into these markets. So my question is, at this stage of the company, how do I get in front of angel investors that might be interested in my product, and, you know, where do I start apart from taking a new enterprise code route?
I mean, I would say, you know, there's a handful of angel groups. That's usually a good place. I mean, you know, there's Birmingham Angels, Woodward Angels, there's ones out in the west side, and the whole Michigan Capital Network. I mean, Michael explained it really well. It's exactly what that kind of looks like, but it's for angel groups. So,
I've sent emails and things like that, but I want to know how to get in front of, apart from just contacting like via email, me myself personally. What's a good strategy to get past that initial? I'm familiar with the various funds, but how do I take that next step?
I think it's really important to find that key investor that will be your advocate, somebody who's very passionate about what you're doing And to find that person could be difficult, but you've got a good network here to work through to find somebody, because if there is a Woodward Angel or Grand Angel or Keiretsu Angel that's passionate about what you're doing and that they will speak to their group about you, I think that that would be a strategy that might work. I think getting up in front of a group, even if you got the opportunity, if you haven't warmed up anybody in the group, you'd be presenting to a bunch of people with a closed checkbook that aren't passionate about what you're doing. And there isn't anyone in the audience that's gonna say, hey, I know him and I'm really into what he's doing and I'm investing in it. I think that that would be the strategy that you need to take, especially when you're in a niche market like you are. You're looking for somebody who really cares about what you're doing.
Thank you.
Yeah, so if there's industry specific events, I mean, that would be a great place to go as well. Link up with those investors.
You're absolutely right. I sent a couple of entrepreneurs to Ed Tech Week in New York City.
Yeah, I remember that from last year. There was
Yes,
spoke
and
about that.
yes, and they got so many great contacts there because everyone there was looking at how do we advance ed tech businesses. So things like that, a very good suggestion.
Thank you.
Okay, I'm Marilyn Clark, but I was curious that you didn't talk about sales as attraction when you looked at funding, number one. And then I'm also curious in terms of your groups, if you put people on these boards, if you put them on board, or just advice.
Yeah, I guess, certainly sales and, either what's the potential, how soon are you gonna make that sale to start validating what that revenue stream is? So if your initial seed, if the friends and family money hasn't gotten to a sale yet, then the question is, okay, when are you gonna get a sale? How am I gonna see this? Maybe, we put in part of our investment now, but you negotiated from the sale was fun. I know you want 300,000, maybe we'll put 115, prove up, initial revenue stream, we sell them with initial revenue stream. Good job, right? And then we'll see how the revenue stream built out. And I think, between us, depending on the size of the check, and oftentimes you can negotiate a receipt, that can come also as an individual investor. You're probably in a lot of money in order to get that board seat, whereas if you're an angel group, maybe you need to negotiate with the angel group and you check might come up with that, a seat. Is that fair?
Yeah, no, that sums it up pretty well.
And I was gonna say, in some companies, sales are sort of telling a story, but in other companies, biotech, for instance, they're not gonna see revenue. If they get to their clinical trial, they're home run, if they pass the clinical trial. And other companies, like maybe utilities or transportation, where some of them getting contracts in place, a contract with, the Indian or Swiss government, contract with the municipality. Those contracts are the future revenue, and having the contract in place is more important than having the revenue yesterday. So in some cases, of course, it is the revenue.
Yeah, I think we have found recent years that angel groups and certainly funds are looking for more revenue generation than say years ago when we were pre-seed funding 19. I think we're really at the point where we're really looking for more stabilization, either revenue, certainly the CN fund, and maybe Michael, you could talk about that a little bit, that the MPN fund does look for companies to have a certain level of revenue before they even consider it. Except for maybe those biotech pharma companies.
Yeah, absolutely. I mean, for the fund revenue is a given. I would even say, and this will vary angel group by angel group, but for a lot of them, CN angels, they want to see revenue in a seed pre-seed stage. Even if it's MVP, even if it's a couple logos, they do want to see some level of adoption because it gives them a customer to go talk to and test out that value proposition as well. Michigan is also less aggressive in early stage investing than other environments and ecosystems where, you know, on the coast, you can raise, you know, 8 figures on an idea, right? That's not the reality in Michigan.
Well, we're getting sort of the signal here that it's time to wrap up this panel, so thank you very much